Good morning out there, traders. It is January 26th, 2024. Welcome to the Apteros Daily Market Insight. Let's dive into our recap from yesterday, and then we'll update our levels for today. So, taking a look at what was going on yesterday, we had a line in the sand here. Pretty straightforward session where we had bearish underneath that line in the sand and bullish up above that line in the sand. And you can kind of see generally how this played out. It wasn't a very straightforward situation because we ended up seeing a push off the open right back into our line in the sand area. And then we started to see the semblances of that short kind of holding in here. But then we got a wick that was a little bit higher than we would have liked. And at this point here, it's kind of one of those situations where you start to look at the acceptance picture around this line in the sand. Because it is kind of like murky. And the reason why I say it's murky is because if you look at, a simple, short leg of rhythm, yeah, you're definitely above the line in the sand, and you can, start looking to get long here. If you're looking at the whole totality of the move, then you're still not above that line in the sand and you can start looking to get short. It comes down to your individual process and the ways in which you define acceptance around a specific line in the sand here. For me, I was still looking at the short side, even through this section, simply because of the way the DMI was put together, knowing that this was the main line in the sand, and for it to be negated, I was going to need to see a move that was pushed up into this area here. Something like that was kind of what I was expecting, just based on this area and the time frame it came from. So I was still looking short there, but arguably you could have easily, on a short-term basis, been looking to the long side after this push. So it comes down to individual process for sure. But from there, this was definitely short. Once we push down into here, this, I would say this section here, depending on your process and your read and how you define acceptance, could have been one way or the other. For me, it was still short. So shorts, still through here. But definitely once you got this leg of rhythm, no matter how you define rhythm, if you were using the long or the short-term rhythm, you now re-accept back below there, and you catch the main idea with scenario one in that section there. So not exactly the easiest of sections for us, or easiest of patterns, I guess you would say, around the DMI level here. But overall, we still had a general concept of where that bias was, and how we can basically capitalize on that around this line in the sand zone. So now taking a look at what we have going on today, kind of a similar situation from yesterday. We have a very clear indication of a line in the sand. We have some balance area here that we can use as value, and now we have a very distinct or clear overall context what we're looking for. This is our line in the sand. And this is the main idea for the session, with scenario one being a hold below that. First target is right here into this neutral reference around 4906s, and then a continuation possible down into the other target destination down at 4889s. So that's the main idea, the main scenario for the session today. And if we do end up seeing, a push down below that, you could see we have some neutral references down below and then into a bullish area here. This is really coming from a higher time frame, and I'm monitoring it along with the DMIs to see how this plays out over multiple days. Right now, this is not necessarily in play for us for today's plan. That's really important. This is the main idea for today's plan, right down into here, and then right down into here, and then from there, we kind of monitor and watch to see what happens. This particular neutral reference, this can become bullish if we start to see a pattern of holding and then a continuation back up. So that neutral reference there is something to pay attention to if we get down there today. Now, with the alternate scenario, scenario two, we could look to the upside here if we break out of this particular line in the sand. So that's what I'm really paying attention to with scenario two. Unfortunately, with scenario two, the targeting is thin up here because we don't have a lot of references for us to utilize up above until we start hitting up into that 49.89 area. So it's a lot of open space up here in terms of targeting if scenario two starts playing out. So you're going to have to follow the trend in whatever way, shape, or form your process allows you to do that. If you don't have a way to do that, then you want to keep things very short term once we get up above here, even though that would be kind of the nice open space type of trade. It's one of those situations where without a lot of targeting over our heads, we have to kind of trade like we are at all-time highs. So whatever tactics you may use or process you may use to do that is what you would employ here But there is a stretch target up above here. This is the last place that we really saw value back whenever all-time highs were kind of established. So we do have some references up there, some naked references from old value that we can use. You can see them up above here that we can monitor as we continue to climb, if that happens or manifests itself today. But like I said, the main idea for today is scenario one, that we hold this bearish line in the sand and start looking for the downside for first target and then second target down below there. All right, so trade well out there, mind your risk, and make sure you follow your process, and have a great trading day.